Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday the 20th of December 2020, and we're publishing the third episode in a new series of Bitcoin versus gold and silver, a series which will be published each Sunday for the next few months. Now, we appreciate not everyone is interested in Bitcoin, but it is, like it or not, a competitor to gold and silver. And so we seriously suggest you listen to this series so that you can at least appreciate a competitor resource to our much cherished belief in precious metals. Bitcoin versus gold and silver is a fascinating subject and becoming increasingly more relevant. As since we began this series, Bitcoin has jumped from one record high to another. When we started, it was languishing around $18,000 or just above, and last week, it's reached its highest level ever at $24,160, with its current price, as of today, at $23,919, and we have little doubt it still has much further to go. The question, of course, for many is how high and how soon? Well, in episode 1, we explained why we launched this series and highlighted that many of our subscribers have written to us, stating that there's never been so much currency printed in the history of the world. There's a global pandemic affecting literally millions of businesses and livelihoods across the planet, and yet gold, although having recently reached an all-time high a couple of months back, it's still much lower than many expected or predicted, and silver can only so far muster 3/5 of its previous high. So what's going on? Well, we confirmed there were many reasons for this, and 3 obvious economic reasons in our view included, but were not solely limited to: 1, dollar depreciation has not been as great as many anticipated or predicted, even though its price has fallen. 2, the printing of vast quantities of money actually so far to a large degree has actually bolstered or boosted competitor products such as the equity market. And 3, inflation has not yet occurred, and in fact deflation seems the most likely short to medium term economic default, and gold and silver with it perform better during inflationary times rather than deflationary times. We also highlighted in episode 1, and then moving on into episode 2, confirmed that the equity market is worth approximately $85 trillion. Tradeable gold market is approximately worth $1.5 trillion, and the tradable silver market just $60 billion. Now, while the Bitcoin market capitalization, when Bitcoin was valued just around $18,000 or $19,000, it was valued at $350 billion US. Naturally, we can probably look to add closer to another $100 billion to that figure because of its recent rise. So you're looking at the Bitcoin market being at least 6 or maybe 7 times larger than the tradable silver market. We then covered in episode 2 what is Bitcoin, how does Bitcoin work, how do people get Bitcoins, how are new Bitcoins created, why are Bitcoins valuable, why do people want them, and are they secure? And we then address the fascination that younger people and millennials have in Bitcoin over the likes of physical gold and silver, particularly but not exclusively in the Western world, no doubt. Now today, in episode 3, we highlight some of the disadvantages of Bitcoin. And please bear in mind the following list is not exhaustive. Also, please note that when we refer to the disadvantages of Bitcoin, these points also apply to most, if not all, other cryptocurrencies as well. So here are some of the disadvantages. 1. Security risks. The security risks around Bitcoin are the currency's single greatest drawback. the Bitcoin system has some imperfections and weak points that can be exploited by sophisticated hackers looking to steal Bitcoin for their own use. The Mt. Gox incident, or some pronounce Mount Gox incident, as well as a host of smaller, less publicized incidents, underscore that Bitcoin exchanges are particularly vulnerable to theft by hacking. Now, for background and those not familiar with Mt. Gox, in February 2014, Mt. Gox suspended trading, closed its website and exchange service, and filed for bankruptcy protection from creditors. It announced that approximately 850,000 bitcoins belonging to customers and the company were missing and likely stolen, an amount valued at that time at more than $450 million. Of course, at today's value, we'll be talking multiple billions. 2. There are various ways of robbing or manipulating the Bitcoin system. First is stealing the private keys. Every Bitcoin user has at least one private key, or, in the common vernacular, a password, which is a whole number between 1 and 78 digits in length. Now, individual users can have multiple anonymous handles, each with its own private key, and these keys confirm your identity. Now, without them, users cannot complete transactions, meaning they cannot access their Bitcoin holdings until they recover that key. Now, when a key is lost for good, the corresponding holdings move into a sort of permanent limbo and cannot be recovered. So, private keys essentially give Bitcoin holdings value. But if you were to lose it, or if someone were able to find out what your key is, then of course it can be hacked. The second is exploiting wallet vulnerabilities. Some Bitcoin wallets have security flaws that render them vulnerable to attack. Unfortunately, some service providers, although it's becoming less now, actually store these private keys in the same virtual wallets as Bitcoin funds themselves. That therefore allows the hacker to steal the funds and the keys all at the same time. Third, operating fraudulent exchanges and investment funds. And this is one we particularly draw your attention to because we're often inundated with advertisements about various exchanges and how simple they are and how safe they are. But some so-called legitimate companies dealing in Bitcoin are actual fronts for financial crimes and crime syndicates. For instance, a boutique Bitcoin investment fund called Bitcoin Savings and Trust made a name for itself in the early 2010s by providing outsized returns to early investors. However, Bitcoin Savings and Trust was actually a run-of-the-mill Ponzi scheme. When it went belly up, it wiped out what was then $4.5 million in investor value. 4. Attacking legitimate exchanges directly. Since they attract thousands of users and store millions of dollars in Bitcoin, exchanges are attractive targets. Bitcoins, as mentioned, can be stolen from exchanges' own Bitcoin wallets, which they use to store Bitcoin units taken as exchange fees from users' wallets, as many users store Bitcoin balances with exchanges for convenience. And then 5, attacking dark web marketplaces. Now, the vulnerability of dark web marketplaces are similar to those of Bitcoin exchanges. Another huge Bitcoin heist, not as well publicized as the Mt. Gox hack, affected a dark web marketplace called Sheep Marketplace. Losses approached then $100 million. Forgive the joke, but the sheep were well and truly sheared. So, in addition to the ways of robbing the Bitcoin system and the security risks, there are other disadvantages. So security risks were number one, and various ways of robbing the system number two. The third is black market activities may damage the reputation of Bitcoin and cause some authorities to actually ban its use, which we have actually seen occur in a number of countries worldwide. 4. Bitcoin itself is susceptible to high price volatility, and we've seen that even in recent weeks. 5. No chargeback or refunds. A lack of standardized policy for chargeback or refunds, as you'd get with a credit card company and traditional online payment processors, do not exist for Bitcoin, or if they have, they are seldom at the moment. 6. The potential for Bitcoin to be replaced either by a superior cryptocurrency, although we feel that might be tough to achieve, but nevertheless possible, or more than likely, a government-backed and supported cryptocurrency, which could then lead, in theory at least, to Bitcoin being banned in even more countries. 7. The environmental ills of Bitcoin mining. As briefly mentioned, Bitcoin mining consumes vast amounts of electricity. According to Business Insider, some of the biggest Bitcoin mining companies are based in China, where most power comes from dirty coal plants and horrific smog, routinely making even low-key outdoor activity unsafe for healthy adults. So those who care about the environment, Bitcoin is not as environmentally friendly a currency as many may presuppose. 8. The electricity consumed to achieve that is the same as the amount of a city with a population of 100,000 people would use. In other words, to produce a Bitcoin, it's a vast amount of electricity. And one must also not forget the expensive custom mining equipment, which is almost useless for any purpose other than mining Bitcoin. Now, this in itself may either limit or even prevent additional Bitcoins being created, which would mean it cannot keep up with an ever-expanding global economy. Or it can, but only by its price rising, which for the holders would be marvellous. But is it practical? And 9, similar to fiat currencies, Bitcoin is also not backed by any gold or silver. Hence, does not have any intrinsic value. Now you may say, well, what's the difference? Well, whether we like it or not, the value of any currency comes from the backing of the state that issues it and the trust that people have over the government of that state. So, whilst many criticize the dollar is doomed, it will be doomed when everyone loses confidence in the value of the dollar, and more importantly, in the government of the United States that is backing that dollar, which is why you find that most currencies collapse in what we call banana republic type countries. But when the currency is the world's reserve currency, an overnight collapse, though not impossible, is extremely unlikely. What one is more likely to find is a gradual diminution of its value. And hence, any money to be established as an exchange of value within a network, it's important for the network to trust it, regardless of who or what is backing it. So they are 9 key fundamental reasons why Bitcoin and cryptocurrencies provide a risk. Now, of course, holders of gold and silver can argue, well, my home can be robbed, or I can be robbed carrying it, and that is very true. However, do you not perhaps think that the risks are greater for Bitcoin than they might be for holding precious metals? We shall look at the precious metals side of things in episode 4 next week. Thank you for listening. Please do share your thoughts whether you agree or disagree with the disadvantages given. And, of course, as always, if you haven't already done so, please subscribe to our channel, not forgetting to press the bell sign so that you're notified of our videos as and when they're published. And we list in the description box below a number of books highlighting how Bitcoin and cryptocurrencies work, some advantages, some disadvantages, and one or two courses that one can take which are relatively low cost in order to familiarize yourself with this ever-growing marketplace, unless, of course, you limit yourself to YouTube and have a look on there. There are plenty of people advocating Bitcoin, but just like the pumpers, bear in mind, they probably have an ulterior motive. So until next week, thank you for listening. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.